So you've brought in this article about real estate FOMO. It's called 7 Critical Real Estate Investment Pitfalls. Avoid the FOMO trap. And it feels really relevant, especially since it just came out like this week on October 4th, 2024.
Yeah, I agree. This whole thing about FOMO leading to like a 15% increase in people regretting their purchases, that's kind of wild when you think about it.
Right. It's that fear of getting priced out forever.
Yeah.
And this article nails how real estate especially seems to amplify that urgency.
It's a bunch of things coming together, really. You've got developers, right? They're showing off these shiny new projects, often in really desirable areas.
And it makes it feel like, oh, those prices are only going up.
Exactly. And that just feeds into that anxiety of, oh, no, if I don't jump in now.
And then there's that whole scarcity tactic, only 2 units left.
Classic. It happens everywhere, though.
Oh, totally.
Like, remember the whole craze with those limited edition sneakers?
Oh, yeah, or even those hot tech stocks. People go crazy.
It's FOMO. Logic goes out the window.
Exactly. And in real estate, that brings us to this whole short-term versus long-term thinking. Like flipping for a quick buck versus holding onto a property, hoping it appreciates over time.
And the article found that a lot of investors, like 60 to 70%, are all about that short-term game these days.
Trying to get those quick returns. But, as the article points out, that can be risky too. They use that listed company project as a case study.
Yeah, I remember that one. Hype doesn't mean long-term value.
Big launch in Sector 49. Well-known developer. Everyone wanted a piece. Now, those big 4-bedroom plus units, they're struggling to find buyers. Shows you what happens when hype fizzles out.
And that's where those short-term risks come in, right?
Like overextension, for example.
Huge one. People see the potential for a quick profit, and suddenly they're in over their heads. They're banking on those prices skyrocketing to bail them out.
And what if they don't? What if those prices plateau, like with the listed company project? Then you're stuck with a property you can't really afford.
And those loan payments are still there.
Exactly, which is how you get those forced fails. Remember that statistic from the Federal Reserve? 22% jump in forced sales because of overextension just last year.
It's a wild market out there.
It really is. So financial readiness is key, right?
Absolutely. Having that down payment's just the start.
It's about understanding your whole financial picture. Your budget, your expenses, those monthly loan repayments.
Be realistic. Don't just assume that future price increases will magically take care of everything.
Totally. And then there's market research. It's not just about pretty brochures.
Oh, not at all. You got to dig deeper.
Like, what's the neighborhood like?
Exactly. What's the growth potential? What are other similar projects doing?
Are there any red flags you're seeing?
It's about seeing the bigger picture, you know? Where's this whole area headed? Because don't just buy what you see, buy where it's going to be.
Exactly. And that brings us to our investment horizon, another thing the article mentioned. Short-term flip or long-term hold.
Completely changes your strategy.
And if you're thinking short-term, those payment plans and exit strategies are crucial.
Oh, yeah. Read the fine print. Understand those payment schedules. What happens if you need to get out early?
Are there penalties?
Exactly.
Yeah.
You don't want to be caught off guard.
So we've talked about the risks, but the article did mention some emerging opportunities too, right? It's not all doom and gloom.
Not at all. Sometimes those less hyped areas are where the real value is.
Right, like affordable options, flexible payment plans, mid-range properties.
Keyword there, mid-range.
Right, those 1.5 to 2 crore properties might be a good sweet spot.
Potentially. But always do your due diligence.
Absolutely. Verify those developer credentials no matter what. Have they delivered before?
Are they financially sound? Do your research.
And again, that location.
Is there real long-term potential there, or is it all hype?
What's the supply and demand situation?
Exactly. Are there a ton of new projects that could flood the market later on? These things matter. And don't be afraid to ask for help.
Totally. Real estate agents, financial advisors.
Even lawyers, they can help you navigate all the details.
But at the end of the day, what I took away from the article is this. Patience is key.
It's so easy to get swept up in the frenzy, to see everyone else buying and feel like you're missing out.
Right. But rushing into something based on FOMO,
Yeah.
that's how you end up regretting it later.
Those steps we discussed, all that research, verifying the developer, really understanding the location.
It's not just a checklist.
It's about laying the foundation for smart decisions. Like building a house, right? You wouldn't just start throwing up walls without a plan.
Exactly. And speaking of those different payment plans the article mentioned, those 1090, 2080 plans.
Yeah, those are interesting, especially for certain buyers.
So for those of us who might not be familiar with these terms, could you break down how those plans work?
Sure. So basically, these plans let buyers, get into a property without needing a huge chunk of cash up front.
Okay, that makes sense.
Like with a 1090 plan, you'd put down 10% at the beginning, and then the other 90% is due later, usually when you get the keys or the project's finished.
Ah, I see.
And it's the same idea with a 2080 plan, just a larger upfront payment.
So it makes those mid-range properties, especially in those up-and-coming areas, a bit more accessible.
Exactly. More flexibility, less pressure at the start. But, and I can't stress this enough, you got to understand all the terms.
Right. Don't get blinded by those easier payments and forget about doing your homework.
Exactly. Always vet those developers. Location too, of course.
Right.
Make sure it aligns with, what you're looking for long term.
Thinking long-term, not making impulsive decisions just because it seems easy.
Exactly. It's about tuning out the noise, not getting caught up in the hype, but really focusing on what makes a good investment.
Which brings up something else the article mentioned, these larger market cycles that happen over years and even decades. How much should those play into an investor strategy?
Oh, that's a big one. We've talked about the short-term stuff, avoiding FOMO, but these cycles add a whole other layer.
Right, like looking at the bigger picture.
Exactly. Are we in a buyer's market or a seller's market right now? What are those long-term economic trends telling us? These things matter. Because no matter how good your plan is, there are these bigger forces out there that no one can control.
So it's not just about finding the right property or timing the market based on what's hot right now, but also understanding those underlying trends that are driving everything.
Exactly. It's about being aware of those boom and bust cycles, because real estate has always had them. And while the past doesn't guarantee the future, it can give us clues about how things might play out over time.
It seems like this whole conversation keeps coming back to that long-term perspective.
It's so important.
Not getting caught up in those quick wins, but really thinking about those fundamental investment strategies that hold true no matter what the market's doing.
Exactly. Playing that long game, riding out the ups and downs, and making decisions that help you reach your goals.
It's about building wealth over time, not chasing quick profits. And that takes patience, discipline, and making smart choices.
Couldn't agree more.
This whole conversation has really got me thinking about the emotional side of real estate. We've talked a lot about FOMO, but it seems like fear and greed probably play a big part too.
Oh, absolutely. Real estate's about numbers, sure, but it's also very emotional.
I mean, it's exciting to think about a potential deal working out.
Hmm.
But if you let your emotions take over, that's how you get into trouble.
Oh, for sure. You got to know yourself, your risk tolerance, how long you're willing to wait for a return, what you're really trying to achieve.
Right, all of that.
And maybe even more importantly, you got to recognize those moments when, like, those emotions are starting to cloud your judgment.
Like, is it FOMO making you jump the gun?
Yeah.
Greed? Or even just the fear of missing out on, the right deal?
Exactly. Because everyone's different, right? What feels risky to one person might be nothing to someone else.
So on top of everything else, you got to be your own therapist too.
Well, maybe not quite. But it does help to have people you trust to talk to.
Right, like having a good financial advisor, an agent who knows the market.
Even a therapist, like you said, can help you sort through all those feelings.
Because at the end of the day, you want to make smart choices, not emotional ones.
Exactly. Real estate should be about building that long-term wealth, reaching your goals, not getting sidetracked by hype or letting your feelings run the show.
Well said. This whole conversation has been eye-opening, honestly. I mean, the article was great, don't get me wrong. But your take on all this, especially that part about the emotional side of it.
It plays a bigger role than people realize.
It really does. Makes you think twice about how you approach these decisions.
That's what I always say, Knowledge is power. The more you understand, the better you'll be at navigating this whole real estate world.
Couldn't agree more. And for everyone listening, thank you for bringing us this article. We love diving into this stuff with you. Until next time, happy investing.